What's going on, everyone? We're going to get right into it. We have market updates, my take on what's going on and what's to come next. So make sure to hit that like and subscribe, and we're going to get right into it. So, first and foremost, I believe 2026 is going to be a year of volatility. So that's, both directions, right? Pain and success. But I think overall, it could lead to a more flat year, and that is the entire year of 2026. Now, we'll talk about how the second half of the year could potentially be pretty lucrative in the upside, but overall, I think 2026 is going to go down in the history books as just kind of a sideways year. And this is why, right? High valuations and AI concerns still persist. Monetary policy and inflation, right? Those inflation reports have really been coming out kind of hot lately. We know what gas prices do to the overall spending, right? But we're going to touch on gas a little bit more in a little bit, right? Geopolitical risks, of course, the ongoing tension with Iran, the Strait of Hormuz, and everything going on over there. I say economic slowdown, but there are some underlying things going on that really could ramp up the economy after 2026. So I think once we get through this year, it's going to be really nice, guys, to be honest. But as long as, well, you know how things go. So what can we expect from the war and conflict in Iran, right? Of course, you are feeling it in your pocketbook with gas prices, right? But overall, energy is just in such a demand, and things are all running off of oil pretty much, and it's at an all-time high. But with that being said, the United States is the leading exporter in oil in the world. So with these high oil prices, it's unfortunate, right? Then there's the whole moral aspect, but the United States is making a lot of money right now, and I might have to fact check that, but I think that's how it is. Is the United States, produces and exports a lot of oil, and oil is extremely high right now. So that could be a long-term benefit, right? So the energy sector is, of course, causing a lot of things to happen with oil prices. So just watch that, right? I saw something that it's a 93% chance that oil prices will remain above $100 by June. So take that for what it's worth. So in terms of interest rates, right? Because I personally have a lot of stocks that, not a lot, but I have some stocks that move with interest rates, right? Directly, in my opinion. One of them being Realty Income Co. So with that being said, I'm still a firm believer in O stock, but the rate cuts have projected to be less frequent this year. I've heard projections all the way as much as 3, which some people still believe, especially with the appointing of the new Fed, which is, quote unquote, a Trump guy. But now expectations are there's only going to be one cut in 2026, right? The Fed has, in my opinion, taken a very hawkish turn, and that is reducing expectations for interest rates. So a lot of these companies, small caps, real estate companies, stuff like that, they're going to take hits because the interest rates are not going lower, not yet at least. So continuing, right, what is the best strategy to do right now as an investor? So diversifying, right? It's great to have tech. It's great to have a little bit of everything, right? But you really want to make sure you're not too heavy in any one category, right? And if guys, of course, see profit, take profit. There's a lot of good opportunity still at this moment, right? With quality investing. I cannot emphasize quality investing. I heard a metaphor about how, it's basically a game of musical chairs, and there's 100, let's say there's 100 companies, and that's just a figure of speech, 100 companies competing for 50 chairs. And all of a sudden the music it stops pretty much right now. And those 50 companies are not going to have space to make it. So you really need to make sure that your money is in quality companies. And we're talking balance sheets. We're talking all those documents, right, that we don't really ever focus on in these videos, which I'll do more of. But you really want to make sure that the balance sheet, the income statement, the asset ratio and all that, it's a lot of accounting, but you really want to make sure that that's good. Anyway, so you can also be dollar cost averaging right now. That's something I'm personally really emphasizing, so that it kind of helps with the emotional part of investing. Focusing on long-term growth, or just whatever your timetable is, right? Know your strategy And I want to just lastly say income investing, right? So maybe you're going into some dividends right now because the share price may be going down, but with the dividend, you're still making some good money. So let me know what you guys think. A lot going on in the market. Just bear with it. No pun intended. And we will get through it. This too shall pass.